Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the first week of February, pretty much February 3rd. And it'll be the weekend after the Super Bowl. A lot of things happening. I'm actually starting this video as the open market here is still open. It's 3 o'clock in the afternoon, and Paul's on the mic here. But I've been just pumping out charts and trading today with you guys in the room and everything else. It's just been a fantastic Friday, and I'm just super motivated. So I'm getting this video started earlier because there's so much to go over. So the live markets right now, just an update. You know, this is Friday's market. We opened up at 9:30. You see the 9:30, and basically there's been a very strong trend, which we're just breaking down from now. And again, this was probably a little bit overdue. You know, the market has been so strong today that we were kind of overdue for this little pullback, and this is again just catching the market here live with you. See if there's anything we can read into and watch happen live. We got a dual stochastic little pullback. We're pulling back to the main pivot area, and it's also an FT71 line. The orange lines we plot in there early in the week. This comes from a volume profile expert, and so we have those lined in with the pivot areas, which are automatically calculated. And actually in some of my cases I'm putting some, I have my trend lines, the stochastic set up here, so we combine them all together and we really get some good levels in the market to work off of. But that's today. Really the key thing about this watch list is today, and what's going on is we're seeing a lot of reversals in consumer products, consumer product stocks, everything from Procter & Gamble to Kellogg to Yum Brands and food products, stuff like that. Everything here really bouncing aggressively considering the market gap down today and giving us some very good reversal candles. And this is all coming in with the fact that the stochastics, some of the other trend lines are setting up, and these are really makes for pure HPS setups. And a regular HPS setup, when we take a look at, let's take a look at Yum Brands for a second. Yum Brands has a nice breakdown here. It came down to a 1-2-3 pattern, and then actually I think there was some news came out from China, and it kind of just slammed the stock, and then got caught with the downtrend in the market. The market was weak, for the last this whole week basically. We are seeing definitely an upside in Yum Brands today, but when we pull back, and we might see, HPS setups based on trend lines and stuff, but when you find a good quality name that pulls away from that 200 period moving average, which is such an important line on a stock, and lots of times you will break down from it, but the majority of the time, if you have a stock that trades around that 20, 50, or 200 period moving average, you start to realize, that stock tends to, make its way back to the major moving averages. It tends to be what we call the moving average, the mean, the average of the prices in that period. So that comes back and forth. So when we get a nice pullback from a moving average, the 200 is a great one to use because it's a very strong average. It's widely used and focused upon, and quality names. Yum Brands, I would fall into that category, tend to trade above it, and if they do break down through it, usually we get a reaction back up to it. So when you're able to catch a good stock that's already oversold, might have a very tight trend line. It might be some other things that are lining up here, maybe a trend line, the stochastics. You have to really, here we go. I didn't even realize it, but here it is. Here's that trend line going back to February here. I didn't even realize that there was that nice pivot area down here, gap down and took off. Well, look how that just goes through there and goes through there. That's amazing that we just did that today. And that was something I just did it right now. I didn't pay attention to this flush that came on, I think probably a earnings release or something like that, and how this thing recovered. But that area, I always say there's an important reason that a stock goes to a certain area and reverses hard off of it, and you have these huge candlesticks. They usually come back and play out a major part in a chart. So whenever you see these extensions, I usually start a trend line, channel line there. From when we have another one that lines up, that really becomes super important because you have two real important levels that's been marked out, and now you can see that we came right down to it, probably to the penny, and we bounced aggressively off of it. Now, when I just caught my eye, I said, well, we're overdue. I'm looking at that 20, but this is now really a pure HPS setup based off the trend line. That's a key thing right there. The oversold stochastics, which have been oversold and shown weakness, those combinations right there are just two of the best. And then we have this reversal candlestick, which kind of guessed that this was going to form. There was a little guessing going on here, because when we did gap down and we saw weakness in the market, we had to make a decision saying this weakness is going to be bought into. This stock has shown enough of downside, so any weakness you just want to buy because it's most likely going to be a reversal. And we've seen that in Procter & Gamble. It was the first thing I said today. I said, buy the weakness on Procter & Gamble. What we're looking for is a candle to form, but you won't know that type of candle is forming until pretty much the end of the day. So my strategy usually is to find that HPS setup, kind of scale into it very small, and look for that that even though this is a very good level here off this trend line, in the case of the markets, you see we gap down, there could be channels that break down. So, you break down on sometimes, you go a little further, but the majority of the time you're going to push back into those channels. But now we had the oversold stochastic, we had a recognizable channel, underlying trend line, everything was lining up, plus we had that gap down. The majority of the time you want to buy that weakness into that, especially if the market has sold off. So that was a picture perfect. And like I said, we did this candlestick yesterday, just kind of describing the candlestick. I said, this is what I'm really looking for. And there we have it. This is almost identical to what we wanted to see. And that's really great. And we're seeing that across many stocks many stocks today. Yum Brands, we saw that outside day, very bullish engulfing pattern, which is one of the stronger ones. The Procter & Gamble, we just talked about this. Nice hammer and that big reversal that's happening. Philip Morris. These are big candlestick. The longer the shadow, the more range it came back is always a big plus. And there's a good shot that we're just going to follow through. And again, going back over to just a few of these charts, these are all on the HBS watch list. But again, the 200 period moving average, which is up here, I just kind of extended this down with that red line to show you the direction it's kind of rotating down here. But then you saw we had a nice channel here. We had a green line represents this channel. We broke down through the channel. Just like any other thing, when you break down through something, the chances are of that retest coming back up to that level that was broken, and kind of retest that level, and then it continues to push down. Either way, you could like this as a short or a long, but at this point right here, as you pulled away from this, your risk reward level is so great for that bounce back up. You have to start scaling in down here. You had the oversold stochastics, but it was weak, and then you gap down and you're thinking, oh my God, it just, how do you buy into this? And that's why you have to just kind of be very light in what you do, and just make sure you don't put yourself in that position where you start to get too scared of and you lose confidence in the trade. This was a good setup, and again, Philip Morris looking great for next week. But we're going to go into these in more detail a little bit later. All right, so just catching the end of the markets here. And again, you can see we pulled back down. We got that dual stochastic little bounce off the pivot area. And let me just jump on something right here. All right, here we have the S&P cash chart, and we actually started off this week. We knew that we came down into an oversold level. We have this underlying 1-2-3 pattern. We call this a 1-2-3 pattern because it's actually come from was a rising wedge, which we pretty much could kind of forecast that the market had a good shot of breaking down into this. And then the measured move is you just expand that out to a recognizable channel, and that really brought us right to that zone. This is on the cash here, but right into that the 1769 level. And we've been chopping around it and hanging on here. We got oversold. Everything looked okay. The market's actually quite resilient today and came back pretty good. But take a look at the 60-minute chart. It's just a lot of congestion here, a lot of indecision that's going on. It's very choppy. The downward channel here is, there's a lot of pivot areas that lead to this whole area where we call it the X marks the spot. There's some tighter channels, some longer range longer time frame channels, and there's some underlying trend lines going back to some pivot areas, which we're just chopping around. So it's a very hard read here because there is those signals out there. It seems like the market is getting a little weaker, but we're at the testing point right now, and this is what happens when a trend changes. Lots of times you will see a lot of volatility and indecision, and then even some fake outs, and like that fake out could be just that little pop back up and then that rollover. And RPM was actually brought it to my attention today, the potential of a nice little head and shoulders formation if we did push up a little. And now head and shoulders formation is properly identified in a rising channel like this. You would look for a little bounce and then a failure, and that would, when there's a decent enough trend line here. So, have that also playing out. So, going out and just looking at this market like this, I am cautiously cautious, not even cautiously optimistic. I would like to see this, develop a little bit further. I think there's a little upside here. I think there's potential upside here. But going into the weekend, we got the Super Bowl, we got the Olympics coming up. I mean, there's just kind of weirdness in the air. And I'm just kind of, playing it a little safe. Still has the SPXU as a hedge and cutting some really good trades today. So kind of taking faster profits. So that's where we are right now, coming into the close a little after 3 o'clock. We're going to go back to that chart and start the HPS watch list. So the potential of a head and shoulders pattern here playing out. This will all come clear. Right now, the stochastics on the daily are kind of flatlining. That's not a good thing. So I would say overall, right now a negative, but really indecision. It's hard to call the markets at this point. No predictions to be made. If we want to see a pattern play out and a fake out breakdown, then I would look for some upside before some downside. So let's start off with a couple great setups. And again, that's the S&P cash. I have a couple best bets going into next week, and these positions started on Friday. We even got the alerts out earlier today. So if you're getting this video, you should have got the alerts earlier. I put out even a couple I actually put out a blog alert, just kind of focusing on some of these candlesticks that are developing. Now, Philip Morris International, a couple things I like about this. First of all, you had that sell-off. It's really extended itself from the 20, 50, and 200 period moving average. It's oversold, no doubt about it, and we're getting into that weakness. When we break down from a channel, and which we did here, you can see this just lower trend line and basically the top trend line. We were chopping around in this level, and then we bounced and then failed. Lots of times we get that retracement back up to that trend line, and that's what we're going for. And that's an added plus at the 200s up there, because this stock hasn't traded away from the 200 this distance in a long time. So this is a very, very good setup just based off of some of those candles. Now, there's nothing guaranteed in the market, and you have to do your own research and stuff. But this is what we call HPS setup. High probability setup. It's definitely we have a good shot. I think this, no doubt, is moving back up towards this little trend line up here. So I mean, even though we got a trend, kind of a breakdown retracement 82, which gives us about 4.5 points. All I'm looking for maybe 2 points in here, and I think that would be a fantastic trade, or anything up around that 80, or just maybe even this lower trend line here. Everything here pointed some upside on this. Loving it a lot. So one of the best bets going into next week. Let's take a look at what it looks like on the alerts. Again, these are posted on the HPS site. So if you just go to the HPS site on the dashboard, which one is that? Philip Morris. Let's bring it up. All right, basically this is it. Look at the great bounce play. We could see when I put this out that the candle wasn't actually formed like it is now. We're already starting to go into that positive territory now. So we're starting to get that positive candle. We're moving back above the opening high. And let's see where we are right now. So right now we're at 78.44. So this was a fantastic level. Right into this again. 77 to 78. Right now we're at 78.44. Hopefully you got alerted to it at that time. Bounce zone, again, what we're talking about. If we get up there anywhere into that 80 to 81, I put 81.50 here for a nice bounce retracement. Not even taking in consideration the 200. Again, these are all mapped out for you and all alerted in the box. So looking very forward to this one. I think this is a good one, great one. We've traded Cabela's many times, and I like it. And I was looking at it today. Yeah, Cabela's is one of those stocks that I want to take advantage of. Get to know a little bit more. There's underlying trend line, the 200 period moving average underneath that. But when you start to see these stocks hold that 50 period moving average, even better the 20 period moving average, they're starting to trend nicely. And this one seems to be holding this level good. So I expect this one to continue to push higher. Cabela's CAB, not officially on the watch list, but something that I might actually take advantage of. Now again, the dollar stores, Dollar Tree, beautiful candlestick today. Dollar General, same type of candlestick. I sent this out earlier on the blog. And FDO, let's take a look at FDO. Very nice. This is also a recognizable channel, and we came right back down to the support levels, just getting oversold. So this is really a pure HPS setup too, and probably could go into the platform right here. The underlying trend line is always there in case you happen to get a test of it, like we did test back here. That would become a very important level. I think that's actually such an important level because of this pivot area here. In this pivot area here, remember we talked about those two pivot areas, that they are two real kind of odd ones, not in normal market conditions, but a spike down and then another one that comes right down. Usually that next time we touch that, it's such an important level, it's such a great level. So I think we did show you that on Procter & Gamble, right? Wasn't that Procter & Gamble? What was that, upward trend line? Yeah, this one over here, this was that it? Going back over here. So many stocks, not enough time. All right, well, going back now. On FDO, we're going to set this alert up right now. Even though I do like this level right now, but I'll make sure we know about that. This is a pretty good level. All right, here we are. It's finished and it's ready to rock. FDO, gotta love it. The main two things here: this pivot area break, this pivot reversal, and this big spike down, and then return to glory here. Now we're kind of returning back to those lows. We're actually kind of on a double bottom and almost a little support line here. Not really a double bottom. There's lows down here, but from this channel here, you're coming right down to this level. And this could actually hold up. That's right in that 61 zone. I have the alert down here, right off the lower trend line. This would be an ideal spot just because of these two levels. Already getting oversold. Good shot that this moves back up again. Another situation where we talk about the 200 period moving average, watching the stock retrace its way back to the 200. And here's a good example of it. The breakdown, I always buy into that breakdown because we're going to get a fast rotation back up, especially the first time breaking through. Now this is the second, maybe this is the second time we pulled away from that 200. So again, we're going to still get that reaction back up. Plus everything here. This would be a best bet if it came down to this level. We could see a gap down. For whatever reason, we're going to watch this. You're going to get the alerts, so you won't miss it. Here is Colgate-Palmolive. Colgate-Palmolive came out with earnings. Was it yesterday? And we saw we gapped down today. Look where we gapped down. This is really something that kind of just got by me. I just wasn't looking at it. But it did come right down to this trend line. I did have this trend line in here, and again, that first breakdown through that 200 period moving average. So again, very volatile over the last 2 days, but you can show how important those trend lines are. Now today we had a great opportunity on a lot of different reversals, and they were playing out. This would have been a perfectly a great setup also if we kind of just had this in our corral, had this in our focus list going in, seeing that gap down to that level. That is an instant buy right there. Also gave us that beautiful candlestick. Now we went through enough of these to know that this consumer product group here is really had a good day when it came to the candles. It came to some kind of internal signs that maybe some things are about to change on those. But that CL, just looking back at it and just seeing that level, how we touched it perfectly. Procter & Gamble, we did that. A couple stocks we're going through here. ACT, I haven't dwelled in onto this one. Activists, right? Healthcare stock, and it's just one of the stronger stocks. I've just keep on checking on it. It keeps on moving higher. I want to get into it, but I don't know enough about it. We shall see how that continues to look very good. I'm looking at some of my stocks that were going down here, my notes and stuff. I noticed I have Philip Morris, first one on the list, then I have it down here on the list again twice. 3 times I have it on the list. That's kind of funny because I must have kept on somehow scrolling through it. Well, 2 times. It is definitely one of my favorites going forward. Just going back to that. We already went over this one.